On October 29, 1929, the US stock market lost more value in a single day than the entire cost of World War I. Millions of people lost everything, and almost nobody saw it coming because just weeks earlier, experts were calling it the beginning of permanent prosperity. The 1920s were electric. America had just won a world war. Factories were booming. Cars, radios, skyscrapers, everything was new. And the stock market, it had been climbing for years. Ordinary people, teachers, taxi drivers, shop owners were all buying stocks on borrowed money. Here's the dangerous part. Most people weren't paying full price for their stocks. They were buying on margin, putting down $10 to control $100 worth of shares. Brokers were handing out loans like candy. As long as prices kept rising, everyone was getting rich, but if prices fell even slightly, you owed everything back immediately. In late October 1929, prices started slipping. Nervous investors began selling. That triggered margin calls, brokers demanding their loans back, which forced more selling, which drove prices down further, which triggered more margin calls. It was a death spiral, and it fed itself. On Black Tuesday and October 29th, 16 million shares were traded in a single day. The ticker tape couldn't keep up. People were selling for whatever they could get. Fortunes built over years were gone in hours. Banks failed, businesses closed, and it didn't stop. The market kept falling for 3 more years, losing almost 90% of its value. The crash didn't just wipe out investors. It triggered the Great Depression, a decade of poverty, unemployment, and hunger that reshaped the entire world. And it started with ordinary people borrowing money to bet on a market that everyone assumed could only go up. Follow for more. Next, the dot-com bubble. When adding .com to your company name made you a millionaire, until it didn't.